Zvonimir, please welcome on stage, and I'll leave you the floor to introduce your panelists. Thank you.
Thank you very much, Silvia. As you can see, the agenda of today follows a certain rationale, reasoning. So we have introduced you with the policymakers and the policy context and the discussions. We have boiled down to what are the instruments that we offer from both debt equity side, but also from capacity building and advisory side. Now the next step is to try to paint a picture of a network or types of intermediaries that we normally work with. These are also diverse intermediaries, one commercial bank, one a fund, one a non-bank lending entity, as well as a servicer. And also to close it, we have a representative of one of anchor national promotional players and institutions in Europe. Therefore, I would like to invite Mr. Álvaro Magaz from Nuevo MicroBank to the stage, as well as Alexandre Glaser from Educapital, Professor Markus Rudolf from WHU, who is also a co-founder of Brain Capital, and our longtime colleague Stefano Bragoli, who is now a member of Cassa Depositi and Prestiti team. And this mic is working as well. Effectively, I mean, beyond only presenting the network of intermediaries and different types of intermediaries, what I would like to use as an opportunity is also to provide you with some time to introduce yourselves and to start then there with the questions about your activity and problems, challenges and targets that you see in the future. Why? Because then you will put the face to the name and subsequently after the event be able to also network with the colleagues, especially if you're potentially representatives of intermediaries that are about to sign our guarantee agreements or equity instruments or wish to apply. We can start with you, our colleague Álvaro.
Yeah, okay. Hello, good afternoon everyone. I'm Álvaro Magaz, I'm product manager at MicroBank. I've been working on the detailing and implementation of different programs of InvestU for the last couple of years, managing as well the portfolio for skills and education under the pilot program. And well, it's a pleasure to be here and to be able to talk a little bit about the experience of MicroBank and the collaboration with the European Investment Fund. So hopefully we can take good new ideas for the next couple of years to implement the new products under InvestU. Yeah.
Super, thank you very much. Mr. Markus Rudolf.
Thank you very much. Thank you for having me, and thank you also for inviting us all to really the capital of Europe. That's really a different view here from the 27th floor onto Europe, and therefore it's very inspiring to talk about how European students can be supported by all of the initiatives that we are standing here for. My name is Markus Rudolf. I'm originally, and I am a professor of banking and finance at WHU, Otto Beisheim School of Management. I used to be the dean there for 8 years and the deputy dean for another 6 years. But the reason why I'm sitting here today is, I guess, because together with 2 other people in the year 2005, we founded a company which is called Brain Capital. It is a social impact company. It was not called like this by that time. And it's doing income share agreements. And that's very important in the beginning. It has been very important for WHU to really attract students from family which are socially a little bit weaker. And in the meantime, we have really a lot of different universities, predominantly in Germany and also in other countries of Europe, and trying to basically make it a little bit easier for these kind of students to get access to higher university education. And I guess this is also the reason why we all are sitting here, because that is what we are sharing with each other.
Thank you very much. And our fund manager colleague from Educapital, Alexandre Glaser.
So, hi everyone. So I work for Educapital. We're a VC fund specializing in EdTech and future of work, investing mostly in Series A, so equity investments in companies addressing, amongst other things, the skills gap. We've been supported in our second fund by the EIF, and I'm happy to be here to talk about what we do and the kind of companies we support.
And finally, our colleague Stefano Bragoli, representing Cassa Depositi and Prestiti.
Yeah, how nice to meet you, everybody. Yeah, so after 20 and years and more time spent at the EIB group, so EIB and the IF. Then I moved to Cassa, Depositi, and Prestiti. It's an exchanging program. So we were dealing as an NPI, so National Promotion Institution, National Promotional Bank, as other national promotion institutional banks in Europe, like KfW in Germany, or maybe France, or ICO in Spain. So indeed, actually, we have a different view, different type of, let's say, topics for support the business. Then we'll see in a nutshell afterwards. So yeah, so the idea is to give another idea to deal with EIF and EIB for the support of the economies, and indeed actually here for the skills education topic. Thank you.
Thank you, Stefano. Then to start with Markus and Brain Capital, could you explain to us a bit what is the core activity of Brain Capital? Who are the target beneficiaries, and what have you learned over the years by pursuing the business objectives and social objectives that you have been pursuing?
Yeah, thank you very much for that question. Brain Capital started back in the year 2005, and the observation back in that time was that students who are trying to get access to a university that charges tuition fees, like it is the case for a private institution like WHU is one, is for some people comparatively complicated because people are a little bit sometimes reluctant to accept study tuition fees, which in Germany, by the way, is kind of an exception. Most schools in Germany are not charging tuition fees. I think in France that's different, and in the UK anyhow that's different. But we at WHU, we wanted to basically have an argument and convince people to apply for the institution depending on their talent and not depending on their social background. That was the very important goal. And therefore, two students, and I was very young at that time, young professor and two students, we basically approached our foundation, the so-called Otto Beisheim Foundation, and suggested them to implement something which now is called income share agreements. We called it reverse generation contracts, because a reverse generation contract is a contract where the older, the alumni, are sharing their return with the younger, the current students, so to say. And then we worked on that together with the foundation, and the foundation said, in the end, this is not compliant with our charter and our regulatory framework. We cannot do it. And then we basically started to approach alumni in the beginning. We're collecting small amounts of money for 30, 40 students by that time. We were even leveraging that. And then that enabled 30 students to basically study at WHU. And then when time went by, everything got more professionalized. By that time, those two students who worked with me worked without any salaries and everything. And then funds got bigger, and the investors basically were requiring more professionalization. So therefore, we needed a company, we needed people who were controlling everything and so on. And now we got bigger and bigger. And today, we have a lot of pension funds, other social impact investors, but still alumni and former students of the institutions which we are investing in. And now it's not only for 30 students anymore. We are now financing 9,500 students across 30 different institutions, 300 different academic programs. Most of them still in Germany, and I think we're going to talk about that afterwards. Why not more in other European countries? However, we have a couple of targets also outside Germany, and this is where the company is standing now.
Thank you. Well, we can already follow up with why not other countries as well. But before maybe you answer that second question, how difficult was it to fundraise with pension funds? Was it immediately caught up by the investors, or there was a substantial degree of energy that had to go into that fundraising process?
I'm very grateful for that question, because the fund managers and the pension fund manager, they were very thrilled when they heard the idea in the beginning, but they did nevertheless not invest. Why? Well, because they were thrilled, but we didn't understand under which circumstances they can invest. We didn't in the beginning. We understood the mechanics and we understood the mathematical background of the model, but we didn't understand the regulatory framework within a pension fund is really operating. And that took really a while until we really understood that. All of that legal part and non-mathematical part, non-economics part, turned out to be so extremely important And that, I think the first pension fund was acquired in the year 2010. We started in 2005. So in other words, our learning curve took 5 years. And every shareholders meeting that we had was basically agenda point number 1, closing down the company. Because the first 5 years it simply didn't work before we understood how the model is working. And now we understood it, and that's, of course, much more successful now.
And the target is Germany. How difficult is it to venture outside? Why yes, why not?
Well, it's not only Germany. We have a couple of schools outside Germany, in France, in Spain, in the UK. The difficulty is the different regulatory frameworks. So, in other words, we are operating in the financial intermediary regulation by the Deutsche Bundesbank, BaFin, and that is completely different from the regulatory framework that you have in France, that you have in Italy, that you have in the UK. Maybe this is an exception in Europe, but this time the regulatory framework in Germany turns out to be a little bit less complicated than other frameworks. I know that typically it's the other way around, but at least we were very small. And of course, having an easy access, an easy regulatory environment was really decisive. Otherwise, it would not have been possible if we would have to comply with BaFin rules and with banking rules and everything. And it would be very, very helpful, basically, if in France and Italy and Spain and other European countries, the same regulatory framework, ideally, of course, not very complicated, would hold for companies like ours.
And you had practical support of the regulator itself in the discussions?
Yes, we are in touch with the BaFin and with the regulator. I'm not sure whether it's support, but at least we are regularly in touch with them. Mm-hmm. We get responses. If we have a question, yes, we get an answer. I mean, they have us on their screen, but we are not in their focus, which is good for us.
Understood. Alexandre, from a fundraising point of view, were the challenges simple, the same, different? How did EIF help? And how did that transform into what type of activity vis-a-vis the Educapital activity?
So, I mean, the EIF supported us in the second fund. So maybe I can talk about the fundraising of the second fund. And I think, I mean, it was a long process, like for every other fund, I suppose. That being said, I think what was shared and what is shared by all of our investors and the LPs is the underlying mission, which is to support the growth of human capital in Europe and bridging the ever-growing skills gap. And so I think it was quite, I wouldn't say easy, but I mean it was easy to prove the necessity of a fund to support this and address this challenge. That being said, it was a long process, and it is always a long process. Both because, I mean, the DEIF played a role in supporting us, but because you want to have a diversified pool of LPs with a split between public-private money, institutional investors, corporates, and private investors with different expectations in terms of you know, profile and making all these expectations fit into one investment framework. On another, I think, a very important topic for us, which is impact. So we're Article 9 SFDR fund with the second fund. I mean, the EIF was very supportive in helping us get to that milestone, understand, you know, what are the benefits and why also it's relevant for an education and future of work focused fund to be an Article 9 fund, which we feel is very much at the core of our DNA now. And then how does that translate in the investment that we make? I think, you know, once again, impact is very much the core theme or the core principle of all the investment that we make. And I think the EIF is a regular partner in not necessarily investment decision, but also helping us refine our impact framework, how we view our impact lens, which is very much important at every step of our investment process, from screening to supporting the portfolio companies as they grow and exit. Yeah.
And those companies would be specifically focused on EdTech, education technologies. If you can paint a couple of examples, because it's very interesting to hear about these types of companies, about the ecosystem, and whether or not the ecosystem exists in all areas or regions of Europe.
Yeah. Yes. Very good question. I think, so how we understand EdTech, and I think it's a definition that is quite broad, and other EdTech specialist funds might have different ones, but I think it's everything that's from K-12 to lifelong learning and corporate training, addressing the development of human capital. So So it's going to be everything that helps individuals and organizations grow their skills pool, grow the talent pool for organizations, but also be prepared for what is going to be, requirements in terms of future skills and addressing future skills gap. So we invest in companies that have diverse business models. So it's going to be B2C, B2B. Either pure software or online schools, and the maturity of the ecosystem or of every segment within the EdTech market varies from one country to the next. I think overwhelmingly in Europe, it's corporate training, lifelong learning attract most of the investor funding, and we try to have quite a diversified investment approach. Invest both from a business model point of view and also from a segment point of view. So we try to invest both equally in K-12, so everything that's kindergarten, 12th grade, and in corporate training and lifelong learning. We also have a diversified approach in terms of geography. So we have invested in Germany, in the UK, in the Nordics, in the Netherlands and Spain, so we try to be diversified, and we typically write checks that range from, let's say, 2 to 5 million initial tickets, and we can commit up to 10% of our funds in one portfolio company, so that would be in the second fund around 15 million. Yes, I think that's...
Stage of life of these companies, what's the range that you support?
So typically, we tend to say that they're post-product market fits. So what this means, and it's a difficult to define reality, but it's companies that have found the market they want to address. They know how to address it, but they're looking for external capital to grow either the sales team, implement the go-to-market strategy at a larger scale, go international. So typically companies that are above the million in AR, but in recurring revenue, but that really depends on traction and the business model. It's always going to be company specific. And we support them from this Series A stage up until exit. So in our first fund, we have companies that have gone international, become category leaders by going to the US or in other countries in Europe, and that are now beyond the Series C or Series D mark. But the reality, and it's always going to be company and business model specific. Some companies have a longer ramp-up period, and others, because of the inherent nature of their business model, have the ability to show traction very early on. And so we try to diversify our investment approach accordingly and have companies that have longer sales cycles, others that have shorter sales cycles, some that monetize right up front, others that try to build a user base before finding monetization strategies, and build out a diversified and resilient portfolio accordingly, basically.
Thank you very much. And as a transition question to our colleague Álvaro, when do you see these companies reaching out to traditional lenders or commercial banks? Because to my understanding, most of your portfolio companies are highly driven by intangible assets, which means that they may struggle with collateral that could be claimed or pledged against the bank financing. So are you seeing the transition of the companies towards traditional type of lending or financing? And if not, where is the problem?
Yes. So I think there's a question of maturity. So I think two ways of answering your question. First of all, I mean, typically the companies, when we invest in them and we provide the equity of investment, they will also try to leverage it with debt on a 1-to-1 ratio, 1 to 0.75 ratio. Then once they reach a certain stage in maturity, so beyond the Series B or C, then they become more eligible for traditional lenders, and some of them, and the ones that typically go to find debt financing, they try to establish relationships with the banks pretty early on, and we try to support them in that process. As you said, I mean, they are not always the most, they don't always fit the criteria, both in terms of collateral, but also in terms of maturity more generally. As they grow, as they become, they have a path to profitability, then they become more eligible. And typically, we have seen alternative non-equity financing routes emerging in Europe, including but not limited to revenue-based financing, of course public grants when you have a deep tech component to it, or when you address specific social issues, and then more generally once, I mean, every country will have some form of instrument to support. So in Germany, when you might have, like, your Berlin-based company, you might be applying to Profit, for instance. When you're in France, you might have the BPI that supports you and also helps you get credit from the banks. So it's going to be both at the European level and at the national level, and depending on the model of the company.
Good touching point also on the questions that we will need to ask Stefano later. But before that, Álvaro, if I were to paint a picture of your institution, it would be a non-traditional lender who is a part of a traditional lending banking group. So if you can elaborate on that, yep. And also the journey that you went through in effectively finding the target final beneficiaries, as well as the journey of benefiting from our guarantee products and how it helped, I think it would be useful for the audience.
Yeah, sure. MicroBank is the social bank of CaixaBank. CaixaBank is the largest retail bank in Spain, with actually 30% of the market share. And basically we are able to operate thanks to our agency contract with CaixaBank, which allows us to use their marketing as well as their huge commercial network, over 3,600 brands over the Spanish territory. And also, thanks to the collaboration with the European Investment Fund, which we hold since 2008 through different programs, as it can be COSME, EASY, Skills and Education Pilot Program, the one that is putting us together today here. MicroBank's mission is to contribute to the social progress and well-being, and we do so funding specific projects for specific customers that I would say they are mostly families with low income, entrepreneurs, micro-enterprises, social companies, educational companies, and students and learners. Thanks to this collaboration with the European Investment Fund, we could sign in 2020 the Skills and Education Pilot Program. And since then, it's going to be now 4 years of this program. We have reached the amount of 59 million euros in lent to students and learners through loans. And we are aiming to reach the 81 million that we have production covered under this program for this year, thanks to the digitalization process and as well targeted campaigns. The overall experience with this program has been amazing. We are really proud of this business line, and we have differentiated two products, one for the skills and education for the students, the other one is skills and education for educational companies. We will apply for category A and C because we believe that these customers are the ones that fit better with the mission of MicroBank. And for the educational companies, I would highlight that thanks to the data pool of customers with CaixaBank, as well as the business analytics unit, we can filter, fulfilling the eligibility criteria, and we can reach to these companies in order to finance their necessities, as well as that we have different characteristics for the product as no collateral requirements, etc., that I will explain later. in order to be able to fill the gap and the need of finance that they have at the moment. For the skills and education students, this one is more, let's say, challenging, because in Spain we have this mindset of usually financing the parents, and these ones are the ones that pay for the tuition for the students. Our product is targeted for the student straight away. So this is a challenge to overcome, and we're trying to do so thanks to different components of a full equation, that it would be the digitalization process as well as the collaboration with Imagine. Imagine is the CaixaBank's value proposition for young people, and through the digitalization we have launched end-to-end digital product. So we are trying with targeted campaigns as well with this Imagine value proposition, try to overcome, try to reach all the students and fill the gap and get to them to help them to finance all the studies that they want to do.
I'll put a bookmark on two follow-up questions, potentially, or topics that we can continue discussing on. First one has been raised by Professor Markus, regulatory aspect. You have mentioned analytics, ability to analyze creditworthiness, risk profile, etc. Now, let's move towards our national promotional part of the session as a continuation of the discussion that started bottom-up, meaning that without the students supported potentially vis-a-vis or with income share agreements, you wouldn't have the startups that could be supported by Educapital type intermediary, VC investors, etc., a vibrant ecosystem of startups, scale-ups, spin-offs, etc., that could then be transferred to the traditional, or in your case, non-traditional institution, part of a traditional banking group. What could happen is that without the support that comes from the top before the overall process starts bottom-up, you don't manage to create an ecosystem. So Stefano, how does CDP do that? What are the limitations that you are exposed to, and how did you manage to overcome those?
Yeah, so it's start from the beginning. So by our bylaws, it sounds maybe very weird, but as an Italian national promotion institution, we cannot lend directly to SMEs. I mean, SMEs are the backbone of the Italian economy. Actually, they are the backbones of all European economies. And we have, so we have to think out of the box, so to speak, saying, okay, how we can indeed actually go through from an ecosystem strategic point of view into a deal-by-deal transaction. And we are talking here now only for the SMEs, so the companies. Then we can also touch base about students afterwards, if you want, Zvonimir. Now, the point was, okay, so we have an issue in terms of to access to make those money available both from the national level, knowing that we are very much adverse to risk. We are a national promotion institution, so we receive money, funding money is coming from the post offices. So we are very much adverse to risk, but still actually we need to support the economy in different ways. So we put together, since a while now, we started under previous, say, type of programs like COSME. We also, we have done under the EGF, so the Pan-European Guarantee Fund, and now we did under InvestEU. It seems a bit complicated. Think about an hamburger, okay, so with different layers. So we try and we tend to maximize the money received by in this particular case, by the European Commission, right? Antonino was mentioning before a cap structures. We were mentioning about, okay, with €1 of money given by the European Union, then you can go down to a multiplier effect of 10, 20, whatever. In this particular one, we're very proud because the multiplier is almost 30 times. So what we do, or what we did, indeed, thanks to the AF, we receive a counter guarantee from the AF for us in order to give a guarantee to our guarantee institution, Fondo per le PMI, which in turn they are giving guarantees to the financial market, meaning banks, which in turn actually they give grant loans to SMEs. So in this particular type of layers, then you can see that it's a very, let's say, I would say, time-consuming in the way you structure. But then when you structure the deal and the eligibility criteria, we were discussing about eligibility criteria before, they are very clear, then indeed you can deploy, and you can very much what you are putting on say, just on paper. And in this particular case, we were mentioning about numbers for the skills education part under the InvestEU. We entered with a counter guarantee of 10 million, and indeed we are expecting to not mobilize, but to grant loans to SME for 220, 230 million euros, right? So this is the idea to have such a leverage effect. There are other type of situation the same in Europe. ICO is also doing, the Spanish NPI is doing as well this type of activity. So yeah, so that is fine. We have a constraint by our bylaws, which at the end up with not being a constraint, but be an opportunity to do more and to indeed to create actually a multiplier effect on what indeed is our purpose to, as an NPI normally, so sustainable growth, green transition, inclusivity, and indeed also skills education.
Thank you, Stefano. To return to the two bookmarked topics, regulation across the floor, I would assume, has been one of the challenges. In the context of student lending, the market is very thin, it's very nascent. How would you analyze, how do you analyze risk in that sense? How do you analyze the potential loss on an income share agreement? Help us to understand, help others understand, and maybe from the discussion we can take certain hints, tips and tricks, or requirement for a more general cooperation and coordination among different stakeholders and lenders in the system. Because from our side, for example, it is impossible to analyze with a certain level of quantitative accuracy that we are used to. Therefore, we fully count on the support of the European Commission. Otherwise, our support would not materialize.
Well, that's the other $1 million question, because the portfolio of skills and education in the case of MicroBank is still really short duration, so we don't have enough data collected in order to give an accurate answer to this. But just in order to make sure that we put all the tools and all the mechanisms to work in order to give enough enhanced access to finance, we have been implementing different internal risk politics to fill the gap. But the guess is that in the future, some of these credits, yes, they will be riskier than the other ones that we have in the streamline of different products of Novo MicroBank. For the case of the educational companies, what we have done is use the warranty to reduce the probability of default in order to be able to approve more operations at lower levels of the risk department, which means actually that you can reach more educational companies. As well, the duration of this type of loans is, with these finalities, is longer than usually. You can reach the 10 years and you have up to 12 months of grace period as well. For the case of the students, this one is a little bit more special, let's say, because the debt to income is the basis definition when you are applying for a loan and you are giving money to a client. And in this case, Novo MicroBank has applied an exemption of the debt to income, which means that basically a student can come, no being a customer of CaixaBank or Imagine in Closet, and you can apply for the money, and no one is going to ask anything about your income. It's not going to be taken into account. So if you are eligible and the studies too, you can get the loan. We have another politics for the students as well, as it can be a longer grace period that can go up to 54 months. Usually what we recommend is to use the duration of the studies plus 12 months in order to be able the student to reach the labor market with better opportunities and higher opportunities of greater income and to be able to repay. And the other important part, this is connecting with my last answer about the challenge of the change of mindset. We don't require collateral, so it's only financing the student. That's why we are trying to overcome this challenge with the digitalization and with Imagine, because we only finance the student, there is no collateral requirement, and in Spain usually you finance the parents. So this is the most challenging part. Sorry about the data for the risk, because we don't have it yet, but most likely the risk is going to be higher, at least for the students' part, because you are financing some people that you don't know if they have going to be success in the future with the studies and with the labor market entry.
Thank you. Markus.
Yeah, our problems also have to do with data. Data is one thing. And it has also to do with investors. I mean, what we are trying to do is we're trying to acquire money, typically from institutional investors, to finance students. And then one of the great freedoms that we have in Europe is the freedom to move wherever you want, the freedom to live and work wherever you want. And that makes investors a little bit hesitant because they are quite well acquainted with what is going on in their country. So if it is a German pension fund, they can very good estimate how the legal risk is if one of the students should not hand in the tax declaration or something like that, right? So they can very good deal with the question what happens in Germany. They can not so good deal with the question what is going to happen if you are in France or in Italy. And I would guess an Italian investor would also be a little bit hesitant to basically get in touch with the German legal system. No, the EIF guarantee helps here very much because that basically cuts away the fat tails of the distribution. So if there is a non-German student, if there's an Italian student, and really something goes wrong, which the investors basically cannot evaluate, the European Investment Fund and the guarantee helps, and that's also the reason why we basically started interacting with your institution back in 2019, and that's also quite helpful. Another thing that I would like to make is, because you mentioned data, I mean, our business model depends very much on data. So we have now 9,500 students, but most of them are German students. In other words, we don't have very much data about income predictions or something like that of Italian students, of Estonian students, of Swedish students, of any other type of European students. There is a new initiative of Eurostat where the basis for the income estimations across all countries since 2022 seems to be the same. This is a very helpful initiative because in order to convince investors, we basically have to make prediction about future income. And then, of course, we estimate what kind of jobs are WHU students going to take, ESADE students, Bocconi students are going to take, are they going to be consultants, investment bankers and whatever, and then you can see how much they would earn if there would be an investment banker. So that is something which mitigates the risk to a certain extent, namely a unified European statistical framework. It's not yet perfect, but for us and our business model, extremely helpful. So EIF is helpful, data is helpful, and the risk comes from different legal environments that we have.
Thank you very much. Being mindful of the time, do we have time for 2 questions from the audience, or we should move? We should rather move. Thank you very much.
You're welcome.